up 8%. The numbers, they reported a drop, but not as bad as expected, and they are taking action on the cost base. I suppose that's something that the investors are applauding this morning.
Yeah, I think it's about the forward view. There are no specific targets, but when we look at what's happened and the momentum through the second half of the year, we tried to break down the numbers. You know, they've guided down a couple of times this year, a slight beat in a couple of areas, but not much. So we saw top line down, 15% operating margin fall to 1%, adjusted operating margin from 14%. Big take back on things like their inventory, where there was too much in the marketplace. And under Josh Schulman, the new CEO since last July, he's really looking at Burberry forward and focusing on the core. And that's the idea. And within that, between November, when they announced their first update, to now, they've found an extra 60 million per annum cost savings through 2027. So 100 million in total, and that includes, as you've mentioned, some of those job cuts.
Well, Deborah, walk us through some of those jobs cuts, because we're getting headlines crossing the terminal now from the Burberry CEO saying that those jobs cuts are targeting the office and the retail roles. We're seeing a market that is rewarding Burberry for what they put out this morning, and I'm curious how much of that is due to that organizational change. This is, I think, one of the latest series of organizational changes that Burberry has had. Yeah, so there are 1,700 job cuts. I think some of the headlines say that's around 18% of the market, cutting out things like overtime, overnight, reducing volume, which is needed in this marketplace. And I kind of think that this is Burberry working a little bit ahead of the curve in some ways, given that it's in a strategy overhaul. It's focusing on core. It's been bringing down some price points in categories where it doesn't have the right to have those prices, according to the new CEO and the market in general, given demand has been so difficult for the last couple of years for them. And I think we'll see more of this overall come from other companies, given the biggest issue in the marketplace for luxury right now and the changes between tariffs day by day, week by week, country by country, is about consumer sentiment. So for Burberry, it's about getting the brand back on track and really kitchen sinking while it can. Yeah. And I think that the market is appreciating that and saying, OK, we start with a negative net profit. We start from a base and maybe we get back to sales growth within a 12 rather than an 18-month view.
I've heard of the Castleford Tigers, the rugby league team. I hadn't heard of Castleford, the factory. They're cutting the overnight shift from. Is this what we're going to see elsewhere?
I believe so.
So you talk about them being ahead of the curve. Presumably this is going to have to be, therefore, writ large across the entire luxury industry. Is this something that LVMH is going to have to do? Is this something that, dare I say, even Hermès might have to do? How far does this reach? How far does this strategy reset reach into the luxury sector, do you think?
If we think about Burberry in particular for a second and combine it with the likes of Gucci brands, Salvatore Ferragamo, what's been happening with Michael Kors and others, they've been brands over the last couple of years that just haven't resonated and they've had to make big changes. Yep. And Burberry is probably one of the first to really start to come out at the other end a little bit, though it's still a long road ahead and bumpy. Yeah. But if we look at Hermès, for example, Brunello Cucinelli and others, their volumes are restricted, so that's a different programme. Okay. And within the LVMH group, it's about looking category by category. So the Moet Hennessy side, looking at cognacs being difficult in the marketplace, some of the watch volumes and others. So I think we'll be taking it brand by brand, company by company.